Alrighty, folks, we are live for FOMC. We're going to be rocking and rolling here. Give me a thumbs up to make sure that you guys can hear me. And we're going to be having a good time. I'm going to be talking a little bit quieter today, most likely, because my wife is being filmed by an entire filming crew in my living room. So I got about 30, no, not 30. I got about 10 people in my house, a whole video production crew, looking to put together a commercial for the elections that are coming up. So we're doing some of that, and I'm going to chew on some pistachios while we wait. So FOMC is going to be here in 1 minute, and we need to see what we are between the new day opening gap from the 17th and the weekly on the 16th. We have buy-side liquidity sitting up here, and then we have equal highs. Then we have our higher time frame equal highs are sitting over here. This is my target. That is where I think price is eventually going to be going. So up first here in 10 seconds, I'm really looking for a downside move. That's really what I want to see first, because FOMC tends to be a two-part move. We're going to see what happens. Okay. So we wicked lower. We grabbed the liquidity above. Haven't grabbed anything on the downside. So we just grabbed buy-side liquidity there and aggressively moving towards these equal highs. Wow. 200 points. 200 points in one candle. Woo! Boy, oh boy. Do not mess around with this stuff here, folks. Now, the only other potential we have is if we get equal highs here and we get this in the next 2 or 3 minutes, I'm looking for a huge sell-off. That's what I would want, a huge sell-off. Jordy, how you doing, my friend? When you say tonight, I'm assuming where you're located at, it's the evening for you. It's 1 p.m. It's middle of the afternoon for me. This is what I was really hoping we were going to go the other way to target these equal highs. So if we hit these equal highs, which we will, there's no doubt in my mind. My question is, are we just aggressively wicking through them and coming the other direction? Or are we looking at finding support and moving higher? It's either that or that. One of the two. And I'm not sure exactly what direction we're going to go. Hey, Deborah. So I ended up getting a My Future funded 50K account, and we're going to try it out. I'm going to give my review on it, give a really educated review. I felt like I was trying to do it justice, but I really want to give it a shot and see what I like. The thing right now that I don't like is the monthly. It sounds like it's a monthly cost period, which is $80 or $40 a month, no matter if it's funded or if it's an eval account. That's kind of the impression I got, which is not bad. I mean, you pay monthly for eval's account with Apex, but you have the option to purchase a lifetime account if you think you can keep it. The big thing is, do you think you can keep it? Because if you don't think you can keep it, then it's pointless. It doesn't matter. But most people struggle with blowing accounts more than they do with struggling on too much risk management. I don't very often, I don't hear people saying, man, I'm struggling. I'm just struggling with too much risk management. You don't hear that. So I'm snacking on some pistachios while we're hanging out here. We're waiting for 2:30 to take place. Nothing's going to happen. No trades will be taken till 2:30. Now, I would be interested in an idea like this to grab the data lows. Okay, but we first have to grab these data highs. We kind of grab the data highs there, but I'm going to call that a data high as well. So we got data highs there, and then we have data highs and data lows there. So those are the two, and we got, this is 200 points, so do not be deceived. From here to here is 40 handles. That's 40 handles, folks. I am on micro accounts for any trade that I take today. I will not be doing any minis. No mini contracts. The volume is just too large. If you don't want to blow an account, I would recommend doing micros. This bad boy can rip your face off, or turn that smile into a frown very quickly. Now, I don't really care about listening to the actual event of FOMC. At 2:30, that is when Jerome Powell will come out and speak. So don't go 10 micros either. Mistake. More like, I'm thinking 1 or 2 micros. 2 so the purpose of scaling. I do want to see this take place. And it's not a bad idea to go down to the 30-second, because we just inversed this fair value gap here. Let's see if it finds support there. Let's see if we find support here and not continue to come down here. I would like to see us move towards these highs and the equal highs, using that as still the draw on liquidity. Jordy Trace, to be honest, 2 micros with this volume could yield what a mini could on a regular session. 100%. 100%. This is why you don't. I mean, people think, oh man, I'm going to crush it. I'm going to walk away a champion with a mini and I'm going to be a millionaire. And then they walk away broke. You know, like what happened if I went a long right there? If I did a long right here, because I was looking at this to do a long, right there, boom, destroyed. Is that good or bad? It's good because you can do less risk and you're typically gonna get really good price action after 230. Good afternoon, Al-Kai. Way to go, as in you just passed 3 accounts? Dang. 10 contracts, 16 points per account. I should put up here, trade at your own risk. Is that obvious enough? Trade at your own risk, my friends. I can tell you that if we go aggressive above this right here, if we can close above that, we're running these highs, and there's a good chance we're going to run for that data high. I don't care what they do with rate cuts or not. I mean, they're doing rate cuts because they think that the economy's crashing. They're trying to prop up the market, but they have to be careful by not cutting back too much to encourage inflation again. It is good for investors. It means higher prices typically, but that's what this candle is for, but we could see it crash. The higher prices could have already been booked in by this big uptrend that we've seen. And if you go to the daily time frame, right? So we've had 1, 2, 3, 4, 5 green days in a row, for the most part, with one down close day. Let's get rid of some of this stuff. I really don't care about previous day highs at this point. Buy side liquidity was ran. So, in my opinion, I think it's already priced in and we see lower prices. If we close below that, I may try a short. All right, there's our close. I'm going to try 1 micro right here. Now the hard part of this is you have so much room that I'm going to have to put my limit here at that fair value gap. If we close above that fair value gap, I'm out. We made equal lows there. That's not necessarily a good thing right now. And to be honest, I don't know if I can even tell. It was so high. Yeah, I thought that we might have swept it, which is why we saw a little bit of a bounce there. So I cut that. I'm not really, like I said, the real waiting is for 2:30. We got about 15 minutes left before that. Traders have the best of both worlds. Traders, honestly, it's probably funner to be a trader in a crashing market because the moves are insanely amazing. What we're doing right now is really just waiting. We're on the 30 second because we have so much volatility that it's harder to see moves. But this probably is going to run for this data high. Question is, do you go for this 1 minute? my question is, can we get through this? If we can close above this, we may run to this minor buy side here. And then we have this structure right here. That's a breaker. This is where I would expect it to move higher right here. I was hoping that this was going to close right there. Close above it, but it didn't. All right, there's your close. I would want to see this right now run for this swing high real quick. Retesting that inversion fair value gap that we just created on the 30-second. Let's see if it actually wants to find support here and move higher, or if it's going. We also have an order block. Interesting right there. And see if it's. It looks like it's going to close below that. This is why we wait till 2:30, because that is not as clean, not as nice. And this is part of the FOMC gig. Is it gets kind of crazy during FOMC, during those 30 minutes from 2 to 2:30. And then after that, it kind of just starts, it calms down a little bit, and we see nice order flow. Let me get a little bit of music. Patience right now, folks. That's what we're waiting for. Patience. We're being patient. Patience. We have a 5-minute fair value gap sitting right here. So at this point, what I'm doing is I'm moving my boxes to the obvious fair value gap to see when does price start respecting some of these PD arrays. We have this breaker right here that we're currently respecting. Now, you just need to understand these are giant wicks, so it makes it very hard to play these breakers because that is a 20, almost 20 handles that you have to deal with. We're also creating low resistance liquidity by having these lower highs here. Five-minute looks nasty. We are coming up on 2:30 here. Data high matches up with the new week opening gap. Price, yes. I think I have, do I have that on here? No, because we switched the datas, didn't we? August 18th, no surprise there then. All right, so we got a breaker here, model 2020-22. Let's see if we close below this. All right. So here's some displacement that we've had. Displacement here. Interesting. This structure tells me lower prices, but I don't feel that. It could be short-term lower prices too. I should find August 18th. All right, 30 seconds. Let's see what happens here. If I had to guess, I think we move higher. But it's literally a guess. No close above this so far. We got this low resistance liquidity all the way up to the data highs. Okay, close above this data high, or excuse me, above this inversion fair value gap, swing high. We got another small side, buy side liquidity here and here. Let's see if price wants to find that support. Here's a small breaker that we're bouncing off of inside this inversion. I like that. Hang on, let me make sure I got my micro screen here. What the heck? I don't know why it does that. Sorry, I'm trying to get it so I can show you guys my micro screen when I do a micro trade. Because this is not my micro screen. There we go. All right, in the micros here. Bounced off that, ran this swing high. I think we are off to the races here. Now the question is there an opportunity for me to get in? That is the question. Because I'm not sure if we're going to have an opportunity. I think if it just takes off without me, I'm not going to do anything. The only way I'd be interested is maybe if it comes back into this breaker and a fair value gap sitting right here. And this breaker that I have pulled across over here. I want to see aggression here. I want it to say, hey, I'm going the other way, psych, and then go. That's kind of the language I'm looking for in the charts. And then on top of that, I have a little bit of a concern with this data low here. Wondering how long it's going to be left there. Is it left there for today? Is it left there for an hour? Are we going to head towards it later? That's kind of what I'm looking for. All right, here's that aggression, that aggressive candle that I'm referring to. Okay, I'm going to take a long right here. I'm gonna keep a stop at this low here. So I'm going right, that's gonna be my stop, and that's gonna be my target. All right, so micros, there's my long. We're gonna put that stop there. It's definitely a wider stop, and that's why we're only doing 1 micro. And I am not copying these accounts. These are not copied. Okay, so no trade, didn't work out. 1 micro, loser. That feels nice. When I see a big number like that and my loss is $100 on one account, I'm okay with that. Okay, trade idea 1, no go. What's irritating is it did exactly what I thought I was gonna do. I just didn't put my stop low enough. So still higher prices. I mean, it's, to me, that's where I'm leaning towards. There's too many things sitting right here. And I thought we had our opportunity. The only other opportunity would be right here. What does a 15-second look like? 15-second. Here's that inversion fair value gap, rejecting off that inversion fair value gap right now. Disappointing. Looks like my wife is done. All right, we're coming up into the macro time. 2:45. Right now, we don't have any structure, anything that's obvious. Got this level here. We ended up running this swing high that we ended up running this inversion fair value gap right here, and that played. So I think what needs to happen is if you're going to take a trade, it needs to be for the nearest point of liquidity, just like our rules are, and not try to hold for the bigger move and moving your stop to break even unless you can take off some of your profit once you hit a swing high. I think that's the approach we need to take. Because we're still trading between this high and this low. We're still trading between the news. From a 1 minute perspective, we have this fair value gap right here. And then we got equal lows down here. I like that. Those equal lows, a lot of equal lows right there. Let's see what it wants to do. I like the idea of these equal lows down here right now. Actually, it'd be more like those. I'm kind of looking past this data and looking at these equal lows here. See if it wants to push towards those and maybe grab that data low down there. What do you guys think? The new opening gap at the 17th, Judas, is that what you're thinking? Right down here? I mean, I like that. But if we continue to just play in this, I need it to run one side. Honestly, to get more conviction, I need it to pick a freaking side. If it doesn't pick a side, I can't. I mean, I don't care which side first. Hit this side, and then I'll look at this side. If we hit this side, then I'm gonna look at this side. I mean, one or the other. But if we keep playing in this, it's just makes it very hard to trade. I kind of don't want to wait till it gets up there to take a long. Low, high, lower, low. That's the long right there. I'm gonna take a long there. We'll try that one more time. See if it's gonna push through it or if it's gonna stop. I'll share it with you. All cards on the table. Let's see. I don't want it to go back against me. I really want it to go now. It's 150 or 248. It's the time for it to start running. This is a nice rebalance of this whole area down here. I'm gonna move it to right here. I'll take a 20 handle stop loss and keep it there. All right. I think this is it. Out of anything, this is the one I felt the best about. No, come on. I'm gonna move it to stop, break even. Yeah, I am. I want to remove the risk and just not have to worry about anything. Did I hope I did the ultra. I did normal latency again. I'm sorry, folks. I'm sorry, folks. I hate that. I hate that I can't just automatically have it on the low latency. It changes to normal every single time. Okay, it's 2:51. I could see it wanting to run. I could see it wanting to run the data low first and then the data high. Running to the equal highs. But hopefully it just doesn't and runs higher here. There we go. Let's push. Let's be very aggressive here. I want to see lots of aggression here. Now I'm actually, it's funded, so it's not a big deal anyway. Put in an order block here. What does it look like on the 5 minute here? 5 minute, we have a minute and 30 seconds before we put in a bullish order block on the 5 minute, which is what I would like to see. Now, what could happen very easily is one of these. That's the thing we have to be careful about. I don't know how I am going to be careful. I have my stop set above by like 10 handles, but I mean, that's nothing compared to what we're up right now. Okay, we closed above that. Small close above. That should push us to maybe, hopefully, these highs here. Purpose of this trade is to hold. purpose of this trade is to learn to hold based on the draw liquidity, which I'm probably going to get stopped out here. And that draw being up here with data highs sitting here. Or the equal highs sitting here. Those are the equal highs. Now, if this can turn into an order block here, that would be absolutely amazing. I want to see that inversion happen right here. This to fair value gap to be inverted. And I'm watching the consequent encroachment of this wick. The consequent encroachment of this wick. Don't like that candle. I wanted it to be more aggressive. I like this aggression. I want it to close full body though above this. I don't want the wicks. Okay, we did not. I don't think we closed above it. The low on that is 807.25. The close on that, 807. So 25 cents. I mean, you're going to do all of this to then just drop now? Come on. That's not what you want to do. You want to go higher. Come on. You want to go higher. We have a close above that. I want to see this high ran and these highs ran over here. If I had an extra contract, I would sell one. Really, because I think we might start seeing a little bit of a pullback. Come on. Learn to hold, Tyler. Hold. Watching the consequent encroachment of this. It's about right there. Disappointed we didn't make a higher high here. I'm half tempted to do it. I'm going to. Okay. Sold that position. Got stopped out in profit. What was it? Yeah, for basically $50. I don't know, folks. FOMC is not what it's all cracked up to be. I mean, you look at this structure, it looks like it wants to drop on this 5 minute. Heavily. That's what it looks like on the 5 minute, at least. Okay, we inverse this fair value gap. I mean, that's a sign that we run lower. Do we run and get aggressive there? And run the low? There we go. Okay, so we're watching these data lows here. This is what we want to get. We want this to be hit. We want these to be ran. And then I want to see a reversal. That's what I'm looking for. I would like to see a reversal at this point. Don't know if you noticed, but the BDAG move that originally overhead liquidity, 19,683. Did I not, do I have it selected or something? Come on. Judas, I know I have that. I just don't know where it went to. So I mean, on the last contract, the overhead liquidity was at 19,683, and on this contract to move, yes, that's common because different contracts have just moved differently. So what matters is where this contract is, because this is where all the liquidity is at. Yeah, it's quite annoying because when you're on, let's say the NQZ or NQ1, where it automatically switches for you, you just get different levels there as well. So it is always best to trade the actual contract itself. So we are on December's contract now. I wouldn't be surprised if we just go whoosh and just whoosh, sweep that low. Okay, there it is. I'm not quite sure how it's going to play withdraw since we hit before the contract expired, so the liquidity is still there. I get what you mean. Now, did he hit the equal highs on NQU? NQU 2024. So it didn't hit the equal highs on the previous contract either. So I'm looking at these triple equal highs up here. That's what I'm seeing as my biggest draw. So on NQU, last contract, I was looking at this as my draw. Right now we have a big bearish candle, it looks like. And I wanted this to hit. So my question then is, do we do one of these numbers, hit this fair value gap, and then hit that? That could be a possibility too, leaving that for later again. But to me, this is just inevitably going to be ran. So let's go back to NQZ. Let's get rid of that. We got previous day liquidity here. Let's mark those out. And then we also have that low as well. Okay. Yeah, I mean, it looks like the move is lower. The only thing that I can think of is I put this my data high and I did it on the second candle on the 1 minute. Only thing I can think of is, did I make a mistake and not do the buy side liquidity from the first single data candle and count that as the high being ran? You see what I'm saying? That's something I haven't tested, and I probably need to. But we have previous day low sitting right here. $209. See if it wants for a run for this data low here, or not, the previous day low, right, sitting right here. How wild if we retrace to 18,343 before running the equal highs? It would be insane. It would be insane. Just the volatility on these are crazy. No, not impossible at all. Not impossible at all. Okay, we're still hovering around this data low. Okay, so the question is, what way do we want to go? Does it want to continue lower, which we're so close to this that it makes me think that it could be that. We've already ran buy-side liquidity, so it could not run it and then continue back up for the equal highs. That's just an insane move for it not being a data candle. The amount of how much we've moved in just 200 handles we're going back and forth. 200, 200, 200, 200. Just a lot of volatility. On the 1 hour, wow. No way. The 5 minute hasn't closed above that? Oh, no, we did. Here's a 15 minute. This is, I want to see how we close in the next minute and a half. This 15 minutes gonna close in this. That's crazy. We have this order block right here, 15-minute order block. We're gonna close above that. Got a breaker right here. I'm going to take a stab. Last trade idea. Now, we gotta keep in mind that this is the entire breaker block. And that's just a large stop. So I'm not going to have that as my entire stop. And to be honest, I might just look for 80 ticks of a move and close the trade instead of trying to hold it. Yeah, the equal lows aren't fun. New day opening gap on the 18th. We have a new day opening gap sitting right here. All right, so my entry was right on the new day opening gap, which we're overlapping with it right now. This is the new day opening gap, and that's kind of what we had, a breaker, new day opening gap sitting there. Let's see if it's gonna just fail on us. It would reject right here if it's going to. I'm okay with this as my stop. That'll be my stop. It's the midpoint of this breaker, and I wouldn't want it to come to the mean threshold of this breaker anyway. I want it to stay in the upper half to show me that it's bullish. And if it's not willing to stay in the upper half, it's not convincing me that we're bullish. Come on. My stop is at the midpoint of the breaker. It's at the mean threshold of the breaker bar. This purple box is the breaker bar. And I think we're going to get hit right here. Okay, that's it, folks. Break even. Pretty much, let's see. Minus $7. I'm okay with that. With all the volatility that we're seeing. Yep, I'm okay with that 100%. Them equal lows. Damn equal lows. You know what? I don't think I've ever been a huge fan of FOMC. It's not my cup of tea. My cup of tea is, you know, getting my base hits, 20, 30 handles. I think the mistakes that I make in my trading, this is me verbally processing and trying to become a better trader, is I get my higher time frame draws on liquidity, and I get so stuck in those that I even in my learning to hold trades, I hold beyond the point that I probably should. I'm thinking back on this trade over here that we took. We took this trade right here towards this level, and we got it in long somewhere around here. I don't remember exactly where, but we got in long around here. I honestly could have just targeted this swing high and been happy with 46 handles. And we were even higher than that because we came all the way up to here. So something I need a journal. I need to flush out my thoughts. Today wasn't, I lost $7. That's it. So I'm not really, I am a little disappointed. I'd rather have kept my $150, and I intended no copying, no nothing, just one funded account is all I did. I didn't even do the new eval account on my funded futures that I'm going to try out. I'm going to try those out tomorrow, most likely. But I think there are some lessons to be learned on this, and the takeaways are my takeaway is I should have used this as my buy side liquidity first. I should have made this my data high. I think that's number one. Because if I use that as my data high, I take that data high right here in this candle. We don't even come back up to that data high on the 1 minute. So you see how significant that is? Look at that data high from a 1 minute standpoint, and we come up to it, but we don't even touch it. It's like it knew it was there and then drops aggressively. Why here? It tells me that there has to be some significance in this 1 minute data candle. Specifically 1 minute, not 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, 1 minute. Data high. If I use this as my data high and sweeping this, the next target, if not the equal highs, has to be the data lows. And we ended up running for those data lows here. That may have been an opportunity to, instead of looking for these equal highs, to change my bias towards the data lows. And maybe look at tomorrow, through the evening, we hit the equal highs. Because these equal highs have been messing with me for quite a while. So, I don't know, just some thoughts there. I think I'm going to call it a day here, folks. We'll be back tomorrow morning, 9:20 Eastern Standard Time. If you want to start your funded journey, use the code DTJ for your Apex accounts. And I'm going to be exploring my funded futures. I'll let you know what my thoughts are on that here probably next week. Other than that, thanks